Brad with Wooten CPA. Today we're going to do a very basic video. We're just going to talk about this general concept of filling out your tax return and paying income tax to the United States. So what I've got here is I've got the 1040. It's just one sheet of paper. This is the first page, and that's basically the tax return. All right, there's a lot of schedules behind it. There's a lot of other forms you got to fill out, schedules, computations that you might have to do if you have a complex tax return. But again, we're going to keep this video basic. So look at this. The first half of this page right here, half of it is just information. And it's piece of cake. It's your name, social security number, address, kids' names, social security numbers, and then the spot for you to sign it, as well as a paid preparer if you pay someone else to prepare your tax return for you. That's the first half of this page. Second half is basic concept for income taxes. So what you have is you have a bunch of lines asking for what type of income you had. And so you just put in your income, totals it up. That gives you your AGI, which is your adjusted gross income. It's a big number. A lot of people ask for that number on some forms, maybe if you're doing loans or you're looking for a mortgage or you're filling out some kind of financial form. They might ask for your AGI, your adjusted gross income. So on the 2018 tax return, that was line number 7. Now then you have the standard or itemized deduction. So a lot of people are taking standard deduction now. They just increased it with the Tax Cuts and Jobs Act pretty significantly. So very few people have heard estimates of 5% or less of people in the U.S. will itemize now. So pretty much everyone's getting the standard deduction these days. So that's just standard deduction. It's basically tax-free income. So if you're a married couple filing joint, it's $24,000. That's just $24,000 you get to subtract off of your gross income that is not taxed. Then basically you have some other deductions that are possible there. You have some tax credits. You have some credits that are non-refundable. Those are ones that can offset your tax liability. Then you have some tax credits that are refundable. So if those tax credits are more than your tax liability, you can actually have them as part of your refund. Then you have your estimated tax payments or your withholding from your paycheck. And so that's going to be compared against your tax liability. If your withholding was more than your tax liability, you get a refund. If it was less, you owe taxes. That's the basic concept. It's income, it's deductions, it's some non-refundable tax credits, it's some refundable tax credits, and it's the amount that you have already paid in during the year for your tax liability. If that's more than what it is, you get a refund. If it's less, you owe taxes. That's the basics of your income tax. If you have any questions, feel free to leave a comment, message, or reach out to me. I'd be happy to talk more with you about it. Thank you.